All right, all right. I think we're good. So we should be good to go. All right, everyone. Welcome to our first session of the year with me, Ambrose. Welcome to the session. This is the Octa live trading session. And before we go ahead to talk about the charts, the indicators, or the setups, everything we usually talk about, I want you guys to understand something very important. The fact that you're here on this stream today is not by accident. A lot of people said, "I'm going to take trading seriously this year. I'm going to start strong." Um, but very few people actually showed up to learn. But you did. Okay, you're here on this stream, and that tells me something about you. You're not just chasing money, you're chasing understanding, you're chasing growth, and you're chasing mastery. And before we get started, let me know in the chat, where are you joining me from today? Where are you watching me from? Let me know in the chat. And how long have you been trading? 1 year, few months? You're just getting started? Let me know in the chat as well. Welcome, everybody. Where are you joining me from, and how long have you been trading? Go ahead and let me know in the chat. Guys, for those of you that are new, slow mode is on, so you have to subscribe first before you can use the live chat, and there's a 1 minute delay when you're making comments. Okay, just to give you the information so that when you notice it, you know what it is. Once again, welcome to the session, everybody. Okay, while you got, I'm just looking at the live chat right now to see if you guys are already participating. But while a lot of you are joining and participating, I'm going to go over the disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, for those of you that are already introducing yourself, and for those of you that are new, I'm going to give you a brief intro to who I am. For those of you that don't know me, my name is Ambrose Ebuka. I have 6 years of trading experience and I've built a style that blends precision swinging with strategic scalping in trading. If you don't know what that means, in the course of today's webinar, I'll go ahead and explain to you what it means so that you can understand better. All right. I specialize in gold, GBP JPY, and GBP USD, maintaining an 85% accuracy that is backed by discipline and non-stop backtesting. Once again, welcome. I'll see you guys in the chat already. What do you think about XAGUSD? When we get to the analysis section, I would look at all the pairs that you guys want me to look at. But for those of you joining, welcome to the live trading session. So what's the agenda for today? We're going to look at the economic calendar like we always do. And then we'll talk about zone trading, which is my strategy. Would do the dollar index review and its correlation with other pairs. I will talk about the year 2026. I'll just give you guys some tips that you can use to prepare for the year ahead. And we would have a Q&A session. All right. Now, if you have any questions in the course of this webinar, you can go ahead and always ask in the chat. The session is going to last for about 45 minutes. If you have any questions, you can use the YouTube live chat to ask me your questions. I'm constantly looking at the live chat to see if you guys have questions, and I'll answer all your questions. All right. We'll still get to the Q&A session for today's webinar, and I'll also go ahead to answer your questions. So you can keep that coming, and I'll check to answer your questions. All right, guys, it's 2026, right? It's a new year. This year is not going to be a year of noise for us. It's going to be a year of, you know, it's going to be a year that you build yourself as a different kind of trader. It's not going to be a year of random entries or emotional decisions or blowing accounts. It's going to be different. You're going to be building yourself into becoming a trader that is calm, that is patient, a trader that understands what the market is saying and knows when to act and when to stay out. That's the kind of trader that we're shaping this year. So whether you're a complete beginner, or you're still trying to understand support and resistance, or you've been in the market for a while, but your psychology is giving you issues, or maybe you're profitable sometimes, but you're not consistently profitable yet, this session is for you. The Octa YouTube channel is for you as well, because we don't just do live streams here. It's a process, it's a journey, and you guys know journeys are not built in one day, right? They're built with repetition, consistency, patience, and with the right mindset. All right. I know that this might sound very simple, but it's really deep. You don't become a good trader by winning just one big trade. You become a good trader by showing up every day, learning, even losing, correcting, and showing up again. That's what separates those who last in this market from those that disappear. So this year, we're not going to be chasing the markets. We're not going to be forcing trades. We're going to be trading with patience. We're going to wait to see clearly. We're not trading out of boredom or emotions. We're going to learn to think in probabilities and not in hopes. Okay? And every session we're going to be having, every breakdown, every question that you ask in this chat is a step to that direction. So keep the questions coming. And, I want you guys to just stay comfortable, settle in, clear your mind. Forget about what you lost before. Forget about the mistakes of last year. Today is a fresh page. And on this page, we're going to be building a better understanding in the market. You're going to be executing sharper. We're going to have a new level of thinking in the market. So we're going to get to it right now. I see someone raising a dispute in the live chat. So guys, if you have any disputes regarding your trading accounts, you can always send an email to support@octabroker.com. You can send your dispute to support@octabroker.com. You'll be responded to and you'll be guided accordingly on how to go with that. Okay, so welcome to the session, everybody. I want to ask a question for you guys in the chat. This is going to be very interactive. I'm going to have to converse with you guys frequently. So let me know in the chat, what has been your biggest challenge in trading so far? It could be entries, psychology, risk management, discipline, whatever it is. Just let me know in the chat. What has been your biggest challenge in trading so far? Go ahead and let me know in the chat. What has been your biggest challenge in trading so far? Good evening from Nairobi, Kenya. Good evening and welcome to the session. Let me know in the chat, guys, what has been your biggest challenge in trading so far? Consistency. Okay. Guys, keep them coming, guys. I'm going to be asking you guys the questions, and I want you guys to, engage, participate. Risk management from Lucy. Okay, guys, at the end of this session, right? Risk management, consistency, patience, whatever it is, you're going to learn exactly how to handle it, how to control it, and how to, again, guys, when you decide to, let's say you're having problems with greed or over trading, or you decide to stop something, yeah, you have to replace it. You have to put something there. Because when you say, I'm going to stop over trading, it creates a vacuum. Okay, so what are you going to start doing? If you stop over trading, so what happens next? What are you doing? So you replace that with planning, you replace that with proper analysis. And that's the same thing for consistency, right? If you're having issues with consistency, you're not just going to wake up and say, okay, I want to become consistent. No, you start to put things in place. Things like having a trading plan that you're going to follow every day, and having a reward system for yourself. So when you see things going well because you're consistent, then you reward yourself. We're going to talk about all that at the end or towards the end of the session. So it's very important that you stay to the end, because after the analysis, I'll take your questions and we'll talk about and discuss all this. Remember, we're going to be talking about the year 2026 and how you can be a profitable trader potentially this year. So we're going to start with the economic calendar, fundamental analysis. But before we go straight into fundamental analysis, there's something very important that everyone here needs to understand. Now, the markets can be looked at in different ways. I'm saying this because it's a new year, right? There could be some beginners in the chat today, some people that just want to start trading, and then this video probably popped up on their screen. Now, the markets can be looked at in different ways, and the way you look at the market determines the kind of decisions you will make. Professional traders don't just enter trades, right? We analyze first. And the three main ways you can analyze the market is with technical analysis, fundamental analysis, and sentiment or psychological analysis. I'm going to break it down properly for you. Technical analysis is what you see on the chart, the price, the structure, all this, everything here, right? Support and resistance, trends, patterns, candles, all that. Fundamental analysis is what is happening in the world, like you see here. Technical analysis tells you where is price likely to react. Fundamental analysis is basically why is the market moving? The news, interest rates, inflation, economic data, political events. Fundamental analysis answers the question, why is this market moving? Technical analysis answers the question of where is it going to react? Where are the zones? Where's the best price for me to get into this trade? And then we have sentiment analysis or psychological analysis. This is how traders are positioned and how they feel. How many people are buying? How many people are selling? Is there fear in the market? Is there confidence? Is there panic? So when you understand sentiment analysis, it answers the question of how are people reacting to what is happening. Now listen carefully to this part because it's going to change how you see trading. A professional trader does not depend on only one type of analysis. They understand how all three can work together. The technical shows you where, the fundamental shows you why, and the sentiment analysis shows you the behavior behind the movement. You can actually use technical and fundamental, but when these three aligns, your trades will become clearer and you get to build stronger confidence. So that's why I want to build understanding with you guys today. I want you guys to understand how to read the story of the market, not just the candlesticks, not just the percentages you see here. We're going to lay the foundation of how you can understand and analyze the market, because when you understand what moves the market, it wouldn't surprise you anymore. You stop fighting the market or fighting yourself or fighting your brokers. Or most traders don't even fight themselves. They just blame the market and the brokers. But when you understand what moves the market, you start to flow with it. You start to think like professionals. This is how you grow from guessing to understanding. So we're going to get started right now. And let me know in the chat. If you use technical analysis, type TA. If you use fundamental analysis, type FA. If you use both, you can just type both. Let me know in the chat. So this is the Octa economic calendar. A very beautiful and amazing tool, very important for traders. And this is still under fundamental analysis. Now that you guys understand the three different types of analysis, we're going to start with fundamental, which is understanding what is driving the market from the outside world. Now, here's what I want you guys to understand. Price does not move randomly. Okay, Lucy says technical analysis. Amazing. Price does not move around. Behind every strong move in the market, there's a reason. Interest rates, inflation, employment, central bank decisions, conflicts, political tension, economic growth, economic weakness. These are the things that move big money, and big money is what moves the market. So when you hear fundamentals, think of it like technical analysis is telling you where the price can go. Fundamental is telling you why the price is going there in the first place. For example, if inflation is high, when there is a lot of fear, when currencies are weak, the money runs into safe haven assets like gold. So as a trader, especially on this session right now, you must not be blind to the news. I mean, you don't trade every news. I'm not saying you should go start trading every news, high, low, medium impact. No, but you have to respect the news, because that is where respecting the news is the basic of your fundamental analysis. And this is where the economic calendar comes in. You get to find out the important news that will be released, the data, central bank speeches, interest rate decisions, everything, NFP, CPI, everything is here in the economic calendar. It basically tells you when volatility is likely to enter the market. Now, when you come into the Octa economic calendar, the first thing you want to do is to confirm the date, right? So you don't go ahead to prepare for a news that has not been released yet. So if you're looking at the events for the week, you can put this week. Yeah. If you're looking at today, you can always set that. Then you confirm your time zone as well. Make sure it's in your current location. If you're a beginner trader, you can add medium and high impact. If you keep it at only high impact, you see that there's no event today, yeah? But if I decide to now add medium and low impact, you see that we have a lot of events today. But the thing is, the low impact events bring about low volatility. It's just, it doesn't really move the market. Same thing with the medium impact. It brings about medium or no impact at all. So I just like to focus on the high impact events. But we don't have any high impact event today. So I'll just leave it this way. I focus on the high impact. These are the major events, the interest rate decisions, the CPI, the NFP, FOMC, GDP, all these things. These are the news that can move the market in a very, very violent manner. So how do you use this in trading? You're not using it to gamble. You're not using it to gamble. You're not using it to guess the direction of the market, but you're using it to prepare. So before you go to the before you go to the charts, before you trade, you're asking yourself, is there high impact news today? What time is it? And what markets would it affect? You can look here, you'd see these events would affect the Japanese yen. This is for the Australian dollar, the pound sterling, the euro, Chinese yuan, the US dollar. Is there a big news coming out today? If there's a big news coming out today, you don't want to be involved in that. If you want to be involved in that, you reduce your risk and wait for structure after the news, because during news, the market gets a bit emotional and spreads will widen a bit, your stops will get haunted. You see a lot of break of structure. The structure is just going to be breaking and reforming. So it just creates that awareness that, is this a market I really want to be involved with at this time? I can just wait out 30 minutes when the whole violent volatility slows down, and then I get into the market. That alone can save your account. That alone can save your trading account. Now, when you look at fundamental analysis, you're understanding from fundamental analysis, and you combine that with technical analysis, you stop being confused as a trader. You stop being surprised. I know a lot of times you guys get into trades, you're in profit, and then the next thing, boom, price hits your stop loss and maybe goes back into profit. And when you check, you find out that, oh, NFP was just released, or there was a news that you just missed out on. Now, to understand this calendar properly, you need to look at the previous, the forecast, and the actual. So I'm going to just assume, let's ignore the impacts for a moment, right? You can see that this producer price index was previously 0.3%. And analyst forecasted a 0.1% before the release, and the release came out at 0.1%. Now, for you to understand this, you have to click on the event. Octa has gone to explain what each report would mean. So a high reading is seen as bullish, a low reading is seen as bearish. So obviously 0.1 is less than 0.3, which is bearish. Now, when you see these percentages, you don't just go ahead and say, oh, it's bearish 0.1, 0.3. So the things you need to look at is how much of a difference is it? For example, 0.1, 0.3, it's a huge difference, yeah? But 0.3 to 0.2 might not really be a huge difference. Another thing I want you guys to look at is your main mode of understanding is the actual versus the previous, not actual versus forecast. Just like here, excuse me, guys. You see that the previous was 1.1, the forecast was 0.1, and the actual came back to be 1.1. So you see, you're not looking at actual and forecast, you're looking at actual and previous. So obviously in this economic event, nothing really changed. The market basically stayed the same, and you wouldn't see a lot of volatility from this event. But when you see something like this, a minus 0.8, and the forecast is expecting lower, and you see a huge change in the actual report. This is from this is negative 0.4, negative 0.8. It was expected that this would come out lower than this, but we got into positive in a very huge way. Now, this is a major change. So it's important that you guys take note of this changes. Don't just look at it and say, oh, 2.3 is higher than 0.8, so it's positive. How positive is it? How negative is it? Let me know in the chat if you guys are following. Let me know in the chat if you guys are following. So the fundamentals tells you the story behind the picture, but the chart shows you the picture. So let's go to the chart. We're going to start with the dollar index. If you're wondering, EH means equal highs, LH means lower high. So this is the dollar index on a daily time frame. Now, remember the dollar index was on a free fall, falling. And then you can see what's going on. Double bottom, you know, and you can see that the market has failed to come back for a retest. So let's look at it from a general scheme, or from, you know, a general view. Now, the US dollar is showing signs of strength, but it's important to understand that the strength is not random. And it's not also technical. It's a combination of a lot of things: economic stability, interest rate expectations, and relative weakness in other major economies. If you look at what's going on right now, the US economy is looking more stable than a lot of other economies. Consumer spending, employment, these are holding up, better than expected. When the economy is very resilient like this, a lot of investors will feel, safe to hold the country's currency, and also invest. And then what happens? The demand of the dollar would increase. And they also have the interest rate expectations that are supporting the dollar. A lot of people are talking about how the interest rates are going to get cut in the future. You know, that's the expectation. But currently, the market is no longer expecting that aggressive, fast cut from the Federal Reserve. And as long as the interest rate remains, high compared to Europe, Japan, or the UK, money will continue to flow in the dollar assets, and that would keep the dollar strong. If you look at other pairs, euro, pound, yen, they're all facing their own economic challenges, policy uncertainty, slower growth. All these things make the dollar look strong in comparison to other pairs. And I will see the dollar gain some strength. I still expect more push from the dollar to trade into the zones, to trade into the 99.90, and even potentially retest at 100 for the dollar index in the coming weeks. It's already tapped into that zone. I expect it to trade in that zone in the coming weeks. Our RSI is looking good. Our RSI is pretty bullish. We're trading in the bullish zone right now. The dollar is getting some strength, and if you're looking to trade pairs like GBP USD, Euro USD, my bias on the dollar is bullish, so you might want to sell those pairs. as compared to the dollar. Another interesting pair is gold. Guys, if you have questions, please let me know in the chat. Ask me questions concerning analysis. Another interesting pair. Don't worry, guys. I'll answer your questions in the Q&A session. Okay, I'm seeing the question about tariffs. We'll answer that in the Q&A session. But right now, you can ask me based on analysis, and I'll check that as well. Okay, so right now, gold is one of the most watched markets in the world, and there are a lot of reasons why gold has been moving the way it has been moving. Really, this is the strongest gold move I've seen ever. This is the shortest period of time I've seen gold move this huge. Since I started trading, and it's mind blowing. Okay, so first, gold was just creating multiple all-time highs from this point. Pullback continued to create new all-time highs, hitting records, smashing above $4,600 per ounce. So what's driving this bullish trend on gold? The first thing I want you guys to understand is that gold is a safe haven asset. So what this means is when the markets feel uncertain or risky, a lot of traders and investors will look at gold for protection. You guys are seeing what's going on, the conflict with Israel, Iran, when there's this tension, people look to gold as a safe haven asset. And now we've seen another added um, conflict as well and tension with Venezuela. But then when this geopolitical tensions, ease, then the demand can briefly fall. But if uncertainty returns again, people buy gold again. And then we have central bank demands. All these, central banks that continue to buy gold as part of their reserve. This continuous buying of gold increases the demand for gold. And then we're seeing gold fly up, breaking new boundaries, creating new all-time highs. Now, as we're looking at gold right now, you can clearly see, I'm going to zoom in for you guys. You can clearly see that gold is currently trading around the new all-time high that it has created. I think the all-time high is 4637, right? Even going all the way up to make a retest at 4650 per ounce. This is our most recent, and guys, this is on the daily time frame, all right? This is our most recent swing low, and then we have our demand zone here, most recent demand zone as well. Again, if you're seeing all these trends, generally with all pairs, the market doesn't just go up straight up all the way to one point. When the market wants to create an uptrend, you get to see impulsive moves and retracements, right? We can call them pullbacks. So in the short term and long term, gold is bullish. Okay, if you look at it, we're bullish. We've broken above the most recent all-time high and created another one here. And price is already forming market reaction at this new all-time high as well, which we're still going to see potential bullish move to the upside. Long-term, the long-term view is still bullish. If I go to the monthly time frame and show you guys, you'd see that we started off bullish in January on gold. You can see strongly bullish, taking out our previous candle high from December, strongly trading above it. So if you're looking at trading gold short term, except you want to trade pullbacks, yeah, except you want to trade pullbacks because the RSI is pretty high right now. The RSI is at 94. That is crazy high. So except you want to trade those, short-term pullbacks, fine. But remember, this is a strongly bullish market. The pullbacks are going to be temporary. The market or the trend is your friend until it bends. So you have to make sure that if you're going to be trading gold to the downside for a long period of time, we need to see a bend in this market. We've been bullish since January last year. Look at that. Look at that. So if you're going to be going against this market, just know that it's going to be short term. You don't want to be caught up in, all this rally to the upside if you're in a sell. Um, there are analysts and forecasts that even suggest that gold would get to 4,800 per ounce or even $5,000 per ounce by late 2026. And that is if we get rate cuts, that is if central banks keep buying, that is if all the uncertainty and the tensions stay elevated. We'll see gold trade at 4,800 per ounce in 2026. But if you have questions, guys, let me know in the chat. So my overall bias on gold is bullish. We'll be keeping an eye and observing the most recent demand zone, which is this. I just pointed it out. So you can take a screenshot. The zones are 4337. This entire zone is our most recent demand zone, which I believe gold is going to come back to tap before we see any continuous bullish momentum. This is also one here, the breakout level. And then we also have this as well. So if gold breaks below this, then we'll be looking at short selling gold for a short period of time. And that is if we break below this point. But gold is pretty much bullish. The opportunities that I would be looking for on gold is going to be bullish. I even expect a breakout from this consolidation that we're seeing here. I expect a breakout from this consolidation without even gold coming down to test all these points. But again, we have to map these zones and create that level of awareness so that we know what to do when the price gets to this level. We know where we're looking out for potential retest and we trade accordingly. But I expect gold to break out of this consolidation here and continue to go to the upside for a potential retest at 4,680 all the way up to 4,700 or even beyond. Now, I know a lot of you guys are wondering, oh, how can the dollar be getting strength and gold be getting strength as well? Are they not supposed to be moving opposites? Normally, yes. Most of the time, when the dollar is strong, gold is weak. When the dollar is weak, gold is strong. But I want you guys to understand that the market is not one dimensional. Sometimes two things can rise together because they are reacting to different reasons. The dollar is rising mainly because of the interest rate expectations, the relative strength compared to other currencies, the euro, GBP, Japanese yen, all the global money that is flowing into the US assets. So the dollar is just strong in the currency sense. Now, gold, on the other hand, is rising because of the fear and uncertainty in the world, the global political tension, central banks buying gold, long-term protection against inflation and policy risk. So gold is strong and rising in a safety sense. And when the market behaves like this, you know, making money or profiting is not by choosing either the dollar or gold. The money is in choosing both. So when there's this kind of fear, people don't say, oh, well, let me choose only one safe place. People say, let me spread my safety. So some money goes into the dollar because it's the world's reserve currency. Some money goes into gold because it's the world's ultimate store of value. It's a safe haven asset. And that's why you see dollar rising because of economic strength, gold rising because of uncertainty and protection and risk. Now, for you as a trader, the lesson is very simple. Don't think in black and white. One market can be strong for a reason, another market can be strong for another reason. Your job is not to start arguing. Your job is to understand the story and wait for a technical confirmation. So if you have any questions, please let me know in the chat. For the analysis on AUD USD, let me see, and Euro USD, again, guys, when I analyze the dollar index, the bias spreads on AUD USD and Euro USD. The dollar is gaining strength, so obviously I'll be looking to short Euro USD. I don't trade much of AUD USD as well, but again, if the dollar is gaining strength, I'll be looking to short the Australian dollar as well. But just additional information, if AUD/USD is a major currency that you trade, you need to look out for economic events that impact the Australian dollar, like the ones we had today, even though those were low impact or medium impact. But again, pay attention to these events because sometimes the fall or the short may not come instantly. You might see some delays, just like you're seeing here. AUD is not really as bearish as it should be, as the US dollar is gaining some strength. We're in a consolidation mode right now. This is the high, this is the low. You can see that the lows are more tested than the highs. And the stronger this gets tested, the stronger the demand zone becomes. If the market breaks below the support, we're coming all the way down for a retest at this point. And further breaks will bring us down to this point. But again, you have to you don't trade in the middle of a consolidation. As you can see, this market is potentially going for another retest here. So you want to trade the breakout of that zone. Guys, if you have questions, please go ahead and ask me your questions. And if you don't understand anything, let me know in the chat as well. If you have questions concerning the analysis, let me know in the chat. Okay, Silver D is asking oil price. Is this still going up? Let's look at oil. Hmm. Hmm. Okay, I know what you're asking. You've probably seen the pump. What's going on? Take this off. Probably seen the pump on oil that happened about a week ago, and then you're wondering if you're going to get continuous pump on oil. Now, right now, the oil market is simply not going up. This is just a volatile market. You can see that there's no clear trend here. It's just consolidating and ranging. So the oil market and the prices of oil is just reacting to a mix of global risk, geopolitical tension, fundamental supply, and demand dynamics. There's no clear trend. There's no clear uptrend. Market has just been bouncy for a while. As you can see, this since October. That's a long time to be bouncing. But all you can just do is to identify the areas of supply and demand are the key areas that the market is showing you, because those are the areas that you pay attention to. But there's not been a clear trend with oil. You know, the conflicts, the protests, and all these countries, they're adding risk to oil. So just to answer your question, there's no clear trade on oil. Supply and fundamental, supply and demand levels are still pretty weak. We're not seeing any successful breakout of these zones yet. Excuse me. So oil is not in a clear or long-term uptrend or downtrend right now. We're seeing it consolidating. Guys, if you have questions, let me know in the chat, guys. Okay, Silver is asking, when will Supreme Court give issue on President Trump's tariff? So there's no confirmed date yet for when the Supreme Court will rule on the tariff case. We know is that the tariff ruling is being monitored, it's watched, because this is something that can have big impacts on US trade policy and the market, especially for currencies and commodities as well. So there's no ruling yet, there's no official dates, but traders are watching, investors are watching for the coming week. All right, guys. I don't see any other questions, so we're just gonna go over the vision for 2026. I'll just walk you guys through what I've created and some steps for 2026. And this covers structure, it covers discipline, it covers consistency. Now, at the beginning of this session, I told you guys that this year is not going to be about chasing big wins. It's about building a system that works even when your emotions are high. Structure means you have a plan. Discipline means you follow your plan. Consistency means you repeat it long enough to see results. Anybody can make money once in the market, but only structured traders make money repeatedly. So we're going to start with the reality of trading. Trading is a probability business. Losses are part of trading, and survival comes before profit. Every trade is uncertain. Even the best setup can fail. Your job is not to always avoid losses and always make 100% wins. No. Your job is to make sure that even if you lose, even if one trade goes against you, it would not destroy your trading account. Then we go to the 3 pillars of a profitable trader. Understanding the market, knowing the trend, the structure, support and resistance, timing, risk management, how much you want to risk per trade, where your stop loss is, how you protect your capital. Then psychology, which is the ability to follow your plan even when you start to get scared or greed shows up. You can have the best strategy in the world, but without psychology and risk control, it's going to fail. I'm talking about failure. This is why most traders fail. No trading plan, over trading, revenge trading, emotional lot sizing, jumping from strategy to strategy. Trading because you're bored. And then if a trade goes against you, you start to increase your lot size. You don't understand the market, you're just clicking buy or sell. 1 week you're trading smart money concept, the next week you're trading moving average indicators, the next week price action. You just jump in from strategy to strategy. And it's a good thing that you create that awareness that this is why you're not profitable in the market, because when you create that awareness, then you go to the next step, which is having the professional mindset to fix the reason why the profits are not consistent. Start with one market. Start with one strategy and practice long enough to see if it works or not. Once enough is like a month. Long enough is like a month. One strategy, one market, one confirmation, one risk model. If you don't be a professional trader, you have to simplify. You don't you're not looking to know how to trade all the pairs. You master one pair first and you master it, deeply. If you see the way hunters hunt, they don't just go ahead and start spraying bullets. They wait for a clean shot and they shoot. So here's going to be your trading process for 2026. You need to have a top-down analysis that takes you from the higher time frames to the lower time frames. You need to be able to identify trends. You need to mark key zones, identify your levels in the markets, wait for pullbacks, enter trades when you confirm the entry. If you're a beginner trader, risk 1 or 2%. The reason why, when we say risk 1 or 2%, reduce your risk, it's like um reducing my risk is not going to buy me a new house or a new car. But the idea is that you need to learn your way around risk tolerance. You need to know what you can risk and how you can play around with your risk first. 0.01 lot size is obviously not going to give you your big dreams. But then if you don't perform well with 0.01, you won't perform well with 10 lot size because you'll be gambling, obviously. And that's not a consistent way to trade. Journal your results. All right, guys, this year we're not gambling, we're building professional habits. All right. Now, if you've got questions, please let me know in the chat. We've come to the end of today's session. If you've got questions, please let me know in the chat. You can ask me your questions and I'll go ahead to answer your questions. And if you haven't already, you can go ahead and use the link in the description to download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. If you made it up until this point, congratulations. Now you have the promo code that can give you a 100% bonus on your deposits. It's Ambrose E100. You can use the promo code on your Octa Trading app or your or the web platform. Go to the promo code section and type in Ambrose E100. The double E's, okay? And you click on activate, make a deposit, and you can enjoy your bonus. There's a volume you need to trade before you can withdraw your bonus to your bank account or to your trading account. So you can check while you're making your deposit and you'll see the volume. All right. Q&A session, guys. Go ahead and ask me questions in the chat. Go ahead and ask me questions in the chat, guys. I want to answer your questions. Okay. All right, guys. I don't see any questions, so I'm going to assume that this was a very comprehensive session. If you have questions still, or maybe you're watching this video after the live session, please ask your questions in the comments and you'd get an answer. Right now, I'd like you guys to take a moment to fill out our survey. Your feedback is essential for us to improve our future webinars. It's going to take just 1 minute. You can go ahead and scan the QR code on your screen or use the link in the description to fill the survey. Again, guys, it's just going to take 1 minute. All right. All right, guys, we've come to the end of the stream. We've come to the end of the live session. Remember, 2026 just got started, you would assume, but we're already 15 days in, and we're already over 3% of 2026. What that means is, if you said you're going to start yesterday, you're already 3% off 2026. So the best thing to do is to start right away, and we're here to help you. Okay, you can join the Octa Nigeria Telegram chat. The link will be in the description or in the live chat as well. If you want to join traders that learn, grow together, share ideas, and if you also want to get information, you can also join the chat. You get all the information you need there as well. Yeah, guys, this was an amazing session. We'll have another one coming up on 22nd, and I'll see you guys. Take it easy, everyone. Bye for now.